folks. It's Joe. It's the 27th of June. It's Tuesday. Let's get into a market roundup as we got confirmation from a bull pullback we discussed last week. I'm going to give you my 2 cents. Take responsibility for the outcome. As always, folks, you know the drill. So let's get into a market analysis as these markets have actually been predictable for the last couple of weeks. So if you've been following along with some of the trades that we've been posting and some of the things that we've been sharing, I should say, then we should be doing okay. Let's take a look at some, by the way. So real quick, folks, how did we finish out? Well, up. Dow, the S&P, the NASDAQ, all higher. The Dow just over 0.5%. The S&P just over 1%. The NASDAQ just over 1.5%. So basically, how they're stacked across the board and how they usually trade amongst each other, that's about right when it comes to just a general push to the upside. All things being equal across those markets. The Russells as well, just shy of 1.5%. Oil took a pretty strong downturn, 2.47% to the downside. Oil's actually right around $67 a barrel. However, it is moving lower. Gold also down about 0.5%, and it could be just because of just the strength that we saw in today's market. What happened? Well, the markets confirmed a bull pullback at support levels. It was absolutely beautiful. It was picture perfect. We'll take a look at the charts here in a second. New home sales up over 12% in May. Housing, new home sales, these are ones that are built because we do have an inventory issue. It's been really tight. People that have houses seem to hold on to them. But we did see a 12% bump to the upside in May in light of higher interest rates. Isn't that crazy? So consumer confidence also higher. 109 versus 104, up pretty substantial. We also had an increase in durable goods orders as well. So it's kind of interesting, folks, because is this signs of the soft landing, or hey, we already kind of had our recession and the worries are kind of gone? We are seeing some prices come down when it comes to some of that flexible stuff. Definitely energy has come down, at least the oil side has. But we are seeing a little bit of a plateau and a drop when it comes to food prices. So in light of inflation that is day to day, we're seeing that kind of curbed, and we're seeing that starting to go the correct direction. There's my 2 cents, by the way. You're welcome. Here's the advanced decline line. 67% advancing, 31% declining. So across the board, pretty strong. Above and below the 50-day moving average, 57% above, 43 below. A little bit of a stagger there. I thought that was going to be closer to 70-30 personally, or at least in the high 60s. But looks like that last correction might have put some of these stocks a little bit lower than they're comfortable with. All right, so let's get into the charts first of all. So here's the SPY, and it is absolutely gorgeous. This is one of my favorite patterns, and you guys I'll show you in a second. This move, when I get a move like this with a confirmation, this is my +2 or greater level, because I have the confidence at this area that we had a correction. I should say right at this area that we had a correction. This, some people would say that's a +2. For me, that's +1 because it's a runaway. It's a push to the upside. We're far above the moving averages. But when I see price correct the way that it has as of last week and the confirmation on a Monday, I know it's super convenient. It's almost too good to be true, but that is where I get super bullish. So in this situation here, I'd probably be like a +1, maybe even reluctant to buy, maybe even a 0. Shorter term, I'm even a -1 expecting this correction. But when I see a correction, once again, I'm going to circle this again at this area, I could be a +2 or even a +3 at this point. So I'm very excited for some of the bulls that I've been looking at, and some of them to come in, because that's kind of what I was hoping for, and so far that's what the markets gave us. So the SPY, beautiful, nice and healthy, pulled it back of a rising 20-day moving average right around that 430 level. You guys can see that where it kind of plateaued and consolidated the beginning of this month. Let's get to the Qs. The Qs is going to be very, very similar. It has that same pullback, that same move to the downside here. It comes back to the moving average. This is a little overextended for me. This is where I feel a lot more comfortable. The only thing I don't want to see is just gaps, because once it starts to gap, it kind of ruins my ability to get into bulls nice and steady. Today, a few triggered. Tomorrow is usually where I entered. So I want to see this be a nice, slow move to the upside, and then once it gets this plateau breakout. But so far, so good, folks. It's an absolute storybook bull pullback with confirmation. Now, to be specific, the Qs didn't quite confirm because this candle does have to trade above it. However, I'm super bullish on it, and I will wait and watch this thing confirm tomorrow. The SPY has. So if you want to get very specific, which you should, this has yet to clear the previous day's high, which was Friday, or excuse me, which was yesterday, Monday. But I anticipate that it shouldn't have a problem getting there maybe tomorrow. So let's get into what participated. Sure, it's green across the board. In fact, it's a little hard. I was saying something like a lot of the darlings didn't participate, but they did. Take a look at Meta here, 3%, Nvidia 3%, Microsoft, Apple, all of them in. Tesla up 3%. All the big boys are there. The candlesticks, I guess I should say, just didn't look as amazing as some of the other ones. So we have a very optimistic market. So I'm there. I have to be. I'm just going to follow along with what I've seen. I'm a +2. I could easily go +3 for the week, but I'm going to stay a little bit at +2 just in case it gaps up and shoots higher. Monthly outlook hasn't changed for me at a +2. I've been waiting for this pullback. I can actually probably, and I might do this depending on how we open tomorrow. I might move it up here to a +3 for my midweek update class, which is going to be tomorrow. But I'm going to be a +2, +3 for the month because we have had this wonderful correction, but definitely a +2 for this week. And I'm looking to be primarily entering to the bull side. I'm not going to abandon any of the bears I have. I've got a slide coming up here, folks, with some bear trades that I've carried from week to week to week that still look really good. So if your bears are working for you, don't jinx them. Let them work for you. There's still bears out there. Let's get to the trades here. DraftKings, Toll Brothers, XLK. I decided, hey, you know what would be a great chart is this sector itself. If you don't want to trade the SP or the Qs, the XLK is a nice one. BKR, one I'm going to share with you is where the Spotify, ARC, Kathy Woodstocks, all of those are doing pretty decent. Not all of them, but most of them. Spotify's been back and forth on our list too. And on the bear side, FANG and GDX and FSLR have been rolling week to week with me in this class, and then OKTA was one from last week, and they still look really good. I've got only a few to look at. I took the liberty of just going to some of the ones we haven't seen recently, BKR, Baker Hughes. What I liked about this one, it didn't really give up anything. It shot up here, and nor did it really, it was reluctant to break out, but it never really fell over, allowed the moving averages to cross back. Never really jumping out in my bull watch to say, hey, look, I'm going to buy this thing if it can stay around the 29 level. Maybe play it sideways between 29 and 31. But even then, I didn't really want to because I kind of wanted to take advantage of this move here where it broke out, the crossover going on. I'd rather buy this thing around 31 and shoot for 32.5 or even 33. So it looks like it's about there. It's not quite confirmed. This is something that I'll be looking at with a nice move above that 31, comfortably above that 31 before I get into it. But it'll be more of a diagonal, maybe a targeted butterfly at 32, 33. I like to go round numbers. I don't think it has 50 cents, but I'll take a look at it. So pretty decent trade overall to the upside. Spotify. Now there's a lot that do look like this. If you guys go through your lists, geez, I can't think of them offhand. Anyways, another one, home builders. Take a look at KBH, take a look at Lennar, Toll Brothers is one on there. They have actually shot up above high bases almost like this, but they have just big green candles today. So home builders shot up, travel shot up, and anything to do with things like that are all really, really good. Okay, so moving on to our last one. This is XLK. I figured, hey, the semiconductor or the technology sector looked really great. Here's a way to trade it. $170 a share. Play the ETF. So it's pulled back. It's got a really nice little stair step that it created after that pullback. I love how it just hit this ridge right there, which seems to be that resistance right at the same place that 20-day moving average is. Great pullback, very uniform. You can shoot this thing up about 176 and a half, 176, somewhere around there, and that'll work. So if you want to play that tech sector, that's a good place to do it. Let's move on to GDX. This is my first bear trade. This one is falling down. This has been on the bear side for quite a while, and it's gold. That's what I like about it. So gold is continuing to be weak. It's rolling down here. We saw a break below this 30, and it looks like it wants to spill off even further. We discussed this a little while ago with 30 actually being our target. In this case, it looks like we could probably move all the way back down to, somewhere around that 28.5 mark. Somewhere around there might be a pretty cool target. FSLR also been on the bear watch for quite some time. You guys can see that we've had this stair step down and down and down. We've talked about this a whole lot. And the first idea was, hey, let's target somewhere about this island gap, right? We talked about the high and the low of this island gap, and it seems to be right about at that 180 mark, right in the mid part of this island. So unless it decides to rally back up to resistance, I would expect this to consolidate and bleed further down. So targeted butterfly on this diagonal spread, but I would definitely still keep this on the bear side. And for you guys that are in it, there's still potential for this to continue lower. OKTA is a newer one. It came to us last week, and so I just like it. And I like the fact that, hey, we're talking about this breaking below the 70. We could target it. We could do something sideways to down, credit spread, and it's been beautiful. It just drooped down there from last week. This was kind of the first support level, but then it looks like it's found this area back here at this 170 mark. So if you're diagonal, you're great. If you're targeted, you're great. Just be patient with this. It had no participation whatsoever in today's move to the upside, and that's a good sign, even though it's in technology software. In fact, the trader that brought this up made mention of it. Hey, if you guys want some sort of a bear in the strong tech sector, this is the stock that I'm looking at. So I love sharing ideas. All right, folks, that's all I've got for a Tuesday. We're going to see what happens tomorrow, but we did get a beautiful confirmation of the bull pullback today. This confirmation that we were looking for and the bull pullback that we discussed and were expecting last week. So far, we've just been 100% right. So don't look too deep into it. Enjoy it. React to it as you would. Trade the markets in front of you because they're doing what we're expecting. The markets are confident and bullish and is expecting a very active consumer this summer. It's in the face. Take a look at the sectors. Not a lot there in energy, which is interesting because airplanes fly on energy, but cruise liners, airlines, and even home builders, all huge. Expectations are where the money's going is for a consumer that's actually going to go out, buy a house, and take a trip. Expansion in housing, manufacturing along with that consumer. There it is, economic soft landing, or is this market hubris, right? It very well could be, right? I always have to go to the other side. I don't want to be super bullish or super bearish. However, this would be a beautiful sign of a soft landing, or is this just absolute hubris of the markets, just seeing that they're bulletproof and they're not worried about anything until it hits the fan? Okay, that's for my doom and gloom bears out there. You're welcome. We do have Powell talking a lot. Talks tomorrow, on Thursday, and then we do have that PCE number on Friday. Now that PCE number came in line or exactly what they expected last time. So if it blips up, you might get overreaction, or if it's in line again, you might get a very confident and comfortable Fed of where they're at. Always check potential trades for earnings. We're kind of out of earnings season, but hey, let's just trade the markets in front of us and enjoy it. Thanks for joining me, folks, and we'll talk to you next time. Bye, everybody.